LNG TV, the official media partner for the World LNG Summit Awards 2021.
Well, welcome back to the World LNG Summit and Awards in Rome. I'm delighted now to be joined by Simon Oxley, the co-head of oil and gas EMEA at Barclays. It's a busy time here, and I know it's coffee break time, so it's quite noisy in the background. So thank you for joining us here
Pleasure.
on LNG TV. It's been an interesting year for the gas and the oil and gas industry, LNG focused. What have been some of the key takeaways from your point of view?
I think, from a broader oil and gas perspective, it's what we've seen with the very volatile pricing in the market has been fascinating, because what I think we anticipated was the drop in gas storage in Europe and the implications of the Russians really holding enough gas to put through Nord Stream 2. But I don't think what anyone anticipated was the operational failures within the Atlantic LNG basin. And that's led to this enormous spike in LNG pricing. And I think what it's done from a broader societal perspective is to push gas into the mainstream of the discussion, because I think there continues to be a debate about the energy transition, the importance of decarbonisation, but how does gas play that role? And I think this year has put it on center stage, so to speak, to say, okay, gas is critical. Investment in gas is critical. If we don't invest in gas, we're going to see the sorts of volatility that we've been observing. And I think more broadly, if we look at it from a sort of a transaction perspective, we've seen a big drop-off in investor demand and investor appetite associated with, call it hydrocarbon-related stocks. But at the same time, we're seeing a super cycle on the mining side. We're seeing the pricing pick up substantially. So on the one hand, you've got oil and gas companies who are making producing a lot of cash flow. But on the other hand, you've got investors who are still staying away and feeling that this isn't necessarily the industry they want to be investing in for the next 10, 15 years, or even the next couple of years. So it's a fascinating stage in the market from our perspective.
And why aren't the investors looking to go into the oil and gas? I mean, more LNG particularly. Is it because of the reputation, or is it because, as you say, they're looking too long term? Or
I think what investors have been looking at more recently is they want return of cash and return on cash. So in the past, some of the majors have invested in very long life LNG-related projects that haven't always had the highest returns. So the concern that investors have in the current market is, we don't want, if you have spare liquidity, spare capacity, we'd rather you pay that to us and we'll choose how to invest that by way of share buybacks or dividends, rather than reinvest it in something which may have a 15-year payback period. So that's the challenge you've got within the oil and gas sector itself, is this sort of, the competition for capital, but also the investors wanting to be able to identify the investment opportunities they want to go after on a specific basis. And that's part of the problem, to an extent, that the majors are having to sort of battle with at the moment, around the benefits of an integrated platform, of which LNG is part of, and then how do you actually demonstrate to investors that the investment criteria and the decisions you're making for some of these long life projects are the things they should be going after. So it's a difficult backdrop in that regard, but the ever-present feature is the requirement to decarbonize, the net zero policies that people are undertaking, and we at Barclays are very focused on this as well. We've put in place energy statements. We are focused around sort of reducing our own carbon requirements, but also trying to support our customers and clients in relation to that sort of decarbonisation effect. So the investor sentiment feeds into that aspect as well, which societal pressures and investor pressures around what exposure those investments have in relation to carbon more generally.
Yeah, I was going to say, there's sort of with the anxiety about the investing in LNG projects, does that mean that there is potential for smaller scale LNG projects to come on board,
yeah.
and perhaps sort of more LNG to power projects, those ones?
And absolutely, and there's a lot of focus on LNG as a form of alternative for transportation, or be that ammonia for ease of transportation, or be that for small scale transportation, small scale storage or bunkering. So yes, there is a focus on trying to develop the investment criteria around that. It's a little bit easier for LNG versus sort of the hydrogen discussion, for example, where there isn't necessarily a market, it's not competitive. But the infrastructure requirements associated with those smaller scale is significant. And that's where, the support from the banks, the support from, sort of appropriately priced financial products is going to be critical in that space. And it's a really sort of strong growth area because the demand outlook for LNG is very, very strong. And this is where the discontinuity between the investor sentiment and the supply-demand outlook really sits, which it's challenging to see that investors don't necessarily quantify that the demand is there and the supply is finite at this point in time without reinvestment. So so absolutely we need to be able to build out the infrastructure associated with that small scale LNG offering over time.
Do you see any mega projects then being financed for next year or more short term?
When you talk about the mega projects, the Qatari project, that's obviously going to go ahead. I mean, it's the lowest cost LNG bar none. The Qataris don't require necessarily financing support. They have a very strong sort of marketing capability around those projects. So those mega projects are going ahead. The ability to, and I think Mozambique, for example, I think we'll see that come back. There are some concerns around what the implications will be for some of the removal of financing support from governments around hydrocarbon-related projects, and if LNG will get caught up in those traps. Now, the UK was obviously supportive around the financing on Mozambique. Will we see pressure going forwards around those types of financing support sources? Possibly. But I think there's still strong support from Japanese, South Korea, China around those projects. So in the short to medium term, I don't think there's that sort of pressure. There's still a strong bank market appetite for North American LNG-related projects. And there's still a relatively strong fixed income and bond market around the space. So no, it doesn't feel like there's pressure at this stage. Coming back to the majors and the investor pressure, I think there is investor pressure on the majors around their ability to commit to some of these larger projects. So I think it's a difference between the availability of financing, but the appetite of the the developers to commit the equity capital they need on a long-term basis.
But can there not be more dynamic financing options that perhaps reduce? They maybe consider 10 years rather than 10 years rather than 20 years.
And there's been a debate about will we see the 20-year LNG offtake contracts sort of being the market standard going forward. So we've started to see more of those 20-year contracts coming back this year. But yes, I think we're starting to see a more flexible and dynamic LNG industry. I think the ability to transfer those 10-year contracts to an LNG project that may have a 12-year payback period or may have different underlying basis risks becomes more of a challenge from the bank's perspective. But obviously, if you can get the banks comfortable that the majority of the funding will be met within that sort of defined period, and you've got strong credit counterparty names on the offtake side, then I think you can find your way through. But the market is continuously evolving, and we have to evolve around that. And some of the emission criteria associated with those offtake arrangements are also important to the financing going forward.
To touch on the decarbonisation you mentioned earlier, and increased ESG scrutiny. What can developers do to ensure that they're well positioned to finance projects during this transition period?
I mean, it's if you sort of break down what is a project from a banker's perspective, we see it as a liquefaction facility, feedstock supply, or it could be integrated into the upstream. Then you've got shipping. So on the upstream side, strong sort of CCS capabilities, ability to reduce methane emission via the midstream, monitoring increased sensor arrays to ensure that you're not getting the leaks, the application of satellites to be able to check the infrastructure. All of that, I think, is something that the oil and gas industry is doing a very good job around. On the liquefaction facilities themselves, obviously the new facilities can build in the call it the lower carbon capacity, their ability to swap out gas compression turbines for electric and build in battery and be able to either source grid electricity or renewable electricity to be able to bring down the carbon associated with that liquefaction facility itself. And then on the shipping side, it's, if you look at the older historical sort of shipping sort of carbon emissions, that made up about 30% of the overall carbon emissions. So there's a significant improvements you can see around the more modern LNG vessels, which have reliquefaction capacity, again, sort of the electrification of the compression, those sorts of things. But I'm clearly not the expert in that space, but it's an area that I think will be important to demonstrate as you're proving up the financing capacity of these projects.
The bell has gone. You've got to get back to the conference. So very quickly, your predictions, short term, then predictions for 2022. What do you hope to see?
I think 2020 was challenging, to say the least. 21, we've seen the continuation of, they call it the pre-FID projects. I think we'll see a sort of an acceleration of FIDs for both the expansion and the pre-FID projects in 2022, because I think, as we talked about at the start of this, the lack of spare capacity we have in the system from a gas basis perspective, the requirement to accelerate through to energy transition and the requirement for gas as part of that means that LNG has to play a critical role. And from a Barclays perspective, we want to be able to be as supportive as we can to our clients and customers as we see that acceleration.
Brilliant. Thank you very much. Thank
Pleasure.
you for finding some time to come talk to us here, and enjoy the rest of the conference. It was a pleasure.
Thank you very much.
Thank you.